Well, now, avoid taking insurance policies. Well, I know this one will be the toughest topic that we can ever discuss, but guess what? I want you to approach this video with utmost intelligence. Take time, listen keenly, and think. Do not approach this video with emotions because you might lose the point. But before we do that, let me ask a very simple question. Who amongst you who are watching this video ever tried to subscribe to an insurance policy, especially maybe let's say education, and then maybe perhaps you wanted to terminate the sort of a process or the contract, and then you actually lost your money? I have been approached, and I'm giving this real information. I have been approached by a lot of people telling me, hey, guess what, Joseph? I lost my money with insurance and all those kind of things. Today, I'm going to share with you an alternative thing that you can be able to do, but I'm not brushing off the effect of the insurance in our lives. They are great people and they are great things in some areas of which I will tell you at the end of this video. All right, now, guess what? If it's your first time watching my videos, my name is Joseph. Make sure that you take 1 second. Doesn't cost you anything. It's free of charge. Down below there on your right, there is a small button written subscribe. It is in black. Hit that magical button and also like that video. All right. And by the way, that's like telling me, hey, Joseph, thank you for sharing this information with you. And again, you'll be notified whenever I upload a new good video. So let's get to the point. Yeah, yes, thank you. Now let's get into the point. Now here we are, we have the insurance policy we would like to get ourselves into. For example, let me use the education insurance policy because it's kind of the most popular one. And obviously whenever somebody approaches you with education policy and whatever about the kids, they kind of evoke our emotional part of our lives. Okay, now let's take an example of an education policy. Okay, now let me tell you one secret. There is something called the emotional part of our lives. There is the emotional part of our lives, and there is the logical part of our lives. All right? And whenever these two things actually matters a lot in our lives. So whenever somebody comes and approaches you, maybe they're selling those insurance policies, they tell you, hey, this is an educational policy, and guess what? Your kids are secured in case you die, you're gonna do this, and by the way, everything is catered for. Okay, see, they're evoking the emotional part of you. And the problem is this: I do not have a problem with them selling the insurance policy on the education. I have no problem with that. The problem is when they tell you it is an investment. It is not an investment. That's where I draw the line. It is not an investment. I prefer them telling us, okay, this is pure insurance. It's not an investment. But the moment you conjoin it's an insurance and at the same time is an investment, you'd rather even say it's a saving rather than saying it's an investment, because investment is a different thing. So it's good to make sure that before you take any action there as far as the insurance or any investment method is concerned, make sure that you do not only engage the emotional part but also the logical part. And this is what I'm going to ask you, a very simple question, and this is why I want you to approach this video with utmost intelligence. Okay, now this guy, they approach you, they tell you they're gonna be submitting a certain amount of money each and every month on the basis of you covering yourself in terms of you paying school fees for your kids, like for the next 13 years, for example. All right, 13 years. Now the thing is, this amount of money, actually what happens is that obviously they promise you returns in terms of the interest rates and what have you. Yeah, their returns, I agree. But the point is this: that return that you usually get is way below the inflation rates. Most of the time, actually over 90% of the times, you find that this returns that they give you is below the inflation rate. But that's not the point. You know what the term insurance means? It means assure. It is to assure. It's to make sure, sort of an assure, to cover you or something of sort. You see, and let me tell you one secret. If you love to play the risk-free kind of a lifestyle, I know you may argue from the point of, insurance covers the uncertainties because you do not know the tomorrow, so they assure you that they're going to take care of you in case you die and all those kind of things. Now, that you're arguing from the consumption point of view. Now, let me ask a very simple question. These insurance policies or these insurance companies, they are in business. That's what you're supposed to understand. And one thing about life is this: whenever there is a deal, there is always a fool. And if you can't see any, you're the one. That's the truth. Now, the point is this. Now, they tell you, you give us your money, and guess what? At the end of this period of time, we're going to be giving you this amount of money, going to pay your school fees for your kids and all those kind of things. Now, the question is, do you think they take that money, then they go underground somewhere in the base in a vault, they keep that money and lock it down? Do they themselves, who insures the insurances? That's the question I always ask myself. If they want us to play the safe way, then how do they then play the safe way? Who insures them? See, they don't take that money, go and put it in an vault somewhere. You know what they do? You give them that money. Let's say maybe it's a contribution of 5,000 each and every month. They invest that money somewhere, maybe say in a money market fund, because some of these insurance companies, they also offer the money market fund. And by the way, they approach them. By the way, have you ever approached your bank and you ask your bank whether they offer the money market fund services? If you want to know what I'm telling you, I've ever approached, I won't name the bank. You approach the bank, you tell them you would like to open a money market fund account. They tell you, no, we have a fixed deposit. You can deposit with us. You know why? The fixed deposit, they give you 6.5%. Money market fund, they are giving you around 14, 13, 12, around there. So they take that money that your fixed deposit, they either give them it in terms of loans to individuals with they are paying over 14% or something of sort, or they invest that money in a treasury bill or treasury bonds where they are given 17%, 18%, in the case of where we are right now, and then they give you the 6.5%, that is pre-tax. So probably that would be like, I mean, seriously, who is losing? So the point is this, I always ask myself, you see, there is a difference between insurance-based product, insurance-based, and I better I should write this. There is something called insurance-based product, and what we call investment-based product. You get the point? So they take this money. Obviously, the moment you give the money each and every month, it's a liability to them. So they take that money, they invest in a far much better thing like treasury bills, because they're sort of a short term. They can get the returns immediately. Or they take that money, they put it in a treasury bond where they get something, or they take that money, they put in an FDS or something of sort. Or maybe you get the point. So they get better returns compared to you. Another thing is that you find these insurance policies, most of them are actually enshrined with secrecy. And actually, it's very hard for you to get out of them. You realize, hey, guess what? What I believe in my life is that I should always put my money where my mouth is. Meaning, I have the leniency, I have the liberty, I can be able to do anything I want with my money. An opportunity can just rise. I want to grab that opportunity. But if I fix myself in a situation where by getting out, I actually get some penalties and punishment and all those kind of things, you would rather tell me, okay, I have a savings plan here, is for the purposes of education. Don't sell the idea of investment. So when you combine the idea of investment, I don't feel secure. Because when you talk of investment, it should be at least above the inflation. Inflation in Kenya right now, as we speak, is around 7%. I'm making this video at around February of year 2024, depends on when you're watching. All right, so it's around this percentage, and these insurance policies, they give you less than this percentage. Therefore, it means that your money is actually losing the value. So you might be given a huge lump sum of money by the virtue of you contributing for a longer period of time, but you haven't gained anything. So alternatively, what would you do? How about you go with the investment-based product rather than going the insurance-based product? You see, when you go with an investment-based product, you pick something like a money market fund. A money market fund gives you far much better interest rates. And again, your money, you can access it anytime you want because it's a liquid. There is no punishments or all those kind of things. And again, you find that the money market fund, obviously, they have what you call the compounding effect. Insurance products, I don't think they have that kind of a thing. I think it's a simple interest. And again, that simple interest is way below the inflation rate. So sometimes it's always good to think about before you pick an investment method out there. And it's good to be very, very smart. For example, if you pick a money market fund investment and the same insurance, okay, you see, you guys, you might think like I'm saying you don't give them jobs. No, I am saying go to the same insurance that you have. They are wonderful people, we love them. Instead of picking the insurance policy, you might go ahead and pick the money market fund and then use it for the purposes of investment. Because if they are not playing the safe game, then why are you playing the safe game? That's the reality, because obviously we have understood and we have agreed together on this video that, hey, guess what? They do not take that money and close it in a vault underground. They take that money and invest it. Right now, you can invest on the bills on your own. You can invest on the bonds on your own. You can invest on MMF on your own. So why don't you pick that example? And I always ask myself, instead of you telling me that, hey, guess what? Put your money with an insurance for the sake of your future. How about I invest by myself? If I have the capacity to build the rentals, if I have the capacity to build the real estate and all those kind of things, and then I insure my real estate. You see, for me, what I would say on this video, as far as the insurance policies or insurances are concerned, I love the insurances when it comes to insuring your car. I love insurances when you coming to insuring your businesses, maybe your homes and all those kinds against the burglary and all those kind of things. They are great. Accidents and fires and all those kind of things. Maybe you're insuring your animals if you're a farmer. It's okay. Those ones are okay. I support it, and I support 100% sure about the cars. What I'm talking about is the insurance policies, especially when they sell it as an idea of investment. No, separate those two things. It is not an investment. If you would like to invest your money, and if you'd like to put your money whereby it is actually earning you a substantive amount of interest, because at the end of the day, we are here to make money. And obviously, one thing that you're supposed to understand, and I understand this, most of the people who are employed here, they're the ones who get manipulated emotionally, especially these guys who work in corporate or fintech industry, the finance and technology. You find these are the guys who are, see, these middle incomers people. I always have a problem with these middle incomers, especially those ones who have been employed. They are the people who you find like they don't want to critically think where their money is. They just want to, sort of get the jobs, get the employed, and get money at the end of the month, and then they enjoy themselves. They don't want to critically think in terms of taking risk out there. And you must have two qualities for you to be successful in life and for you to achieve what we call the financial freedom. You must have what we call the aspect of financial risks. And when I say risk, I don't mean like putting your money anywhere just for the sake of you having risks. No, what I mean here is that make sure that at least wherever you put your money, you actually ask yourself, what are the terms and conditions? And next time you go to approach these companies, or when they approach you selling this insurance policies, ask them, what are the exit plan? I always tell people, if you do not have an exit plan, if they cannot explain to you how you can exit, and if the exit plan does not satisfy you, do not get into a thing. And this is the point I always remind you, and I'm going to say it once again. You see, before you get into any investment, ask yourself, what is the exit plan? How do I exit? For example, if today I want to exit, what are the terms? They tell you, hey, guess what? If you terminate the contract before the period, you lose this amount of... There was someone who approached me and told me, hey, guess what, Joseph? I had invested with close to 100,000. So I lost close to 50. Whoa, that was... Yeah, that was really scary, because they argue from the point of, hey, you have terminated the contract. That was not the terms and conditions, because they say you have to invest continuously until the... Go read those terms and conditions, guy. Don't just accept anything. Just accept anything, accept, and then go ahead and you open it. When a time comes, when a need arises, that the time you realize it's like you're scammed, it's like you are duped or something of sort. Okay, so you should be very careful where and how you put your money into these investments. Again, I said this disclaimer. This is the disclaimer of this video. I did not say that, or I'm not saying that insurances are bad. No, they are good, they are great. I love them, I have them. If you insure our health, it is okay. If we insure our cars, it is okay. If we insure our businesses, our investments like the flats and all those buildings, it is okay. I totally and 100% and one support it. But when they come to a point of them selling the idea of insurance policy as an investment, that's where I draw the line, because it is not an investment. Once you dissect all that information, it is not really an investment. You're supposed to look for an alternative where you are getting value for your money, where your money is actually placed above the inflation. Even sometimes this fixed deposit in a bank, and that's why you see, you go to a bank, they never disclose things in the existence of something like money market fund, because they don't want you to... I was ringed actually by my bank. They told me, hey, guess what, Joseph, we have an opportunity of investment in terms of the treasury bills and bonds. So they wanted me to go through them to invest on the bills and bonds. Then I told them, I already have a bond. That bond you're telling me, and of course, when you go the bank's way, there is something that will be deducted. Obviously, you don't like enjoy the entire profit or the entire percentages that you ought to get if you go the primary way. See, there are different ways of approaching a bond. You can do so the primary way, the secondary way as a nominee, or you can do so maybe when there is an tap sale. Also, see, if you do not have this information, you tend to be manipulated. And this is the point that I'm going to leave you with, guys, because I really care about you. Okay, and I hope you've approached this video with utmost open-minded person, because hey, I know some of you might comment on the comment section, hey, you know what, because sometimes I get this kind of a comments, oh, you know what, it helps me just in case I die, my kids are okay, will be educated. And I'm not brushing off all those factors. It is true, but the fact is there an alternative? Is there the best way that you have actually missed before you choose this option of investments? Those are the critical thinking that you're supposed to have. Remember one thing, this is financial literacy, and whenever there is a deal, be very careful. There is always one fool. So I do not know who will be. You are supposed to be very careful. Always put your money where your mouth is, or put your mouth where your money is. Whatever it's easier for you to move, but make sure the two of them meet at the end of the day. So for now, it's a goodbye. But don't forget one thing. You can always pick my number from the description of this specific video. How about we talk about investments? How about we talk about, sort of planning yourself and all those kind of things? Pick that number. Let's have a discussion. For just a cup of coffee's price, we get discussed. Now, it's a goodbye. See you in the next one. Oh, and by the way, don't forget to comment down below there in the comment section. Tell me what you think. And also like the video. See ya.